Hey guys, welcome back to Firestarter Investing. I want to help you understand your investments and make informed decisions. Today we're going to be talking about Nano-X Imaging, ticker symbol NNOX. We'll talk about who Nano-X is, what they offer, major issues I see, and I'll end with my final thoughts. Again, I'll preface this by saying that these are my own opinions that I want to share with you. This is not investment advice. I'm not certified in anything financial, and you should do your own research before investing in any company. So a friend brought NNOX to my attention. They IPOed this past August, selling about 9 million shares for $18 each, bringing in about $170 million. They now have 25.6 million shares outstanding. Their product and pitch definitely look exciting. They claim to have developed a digital X-ray source that can significantly reduce the cost of imaging systems by between 96 and 99%, and are planning mass deployment of their systems globally over the next few years. They're an Israeli medical imaging startup that was started in 2012 by Hitoshi Masuya, a Japanese VC, and Sony. Rand Polyakin, the current CEO, came on board after Sony dropped out. They now have operations split between Japan and Israel. Just a note, some news articles are saying NNOX was founded in 2016 or 2018. Polyakin states on his LinkedIn profile that he's been working in NNOX since 2012. From what I can find, the company NNOX was founded in 2018, but they were working on this under a different name starting in 2012. Rand Polyakin was the founder and former CEO of PowerMat Technologies, which developed wireless power solutions and started several other firms before getting to NNOX. He aims to, quote, bring new technologies to market, fundamentally solving real-world problems and improving people's lives, end quote. I couldn't find many interviews from the past 2 years post-PowerMat, so I got most of my impression of him from his personal website. Most of the following information is based on their F1 filing. Yes, an F1. Domestic companies file an S1 to IPO, foreign companies file an F1. According to the World Health Organization, 2/3 of the world doesn't have access to medical imaging. The X-ray medical imaging market is worth an estimated $21 billion annually. And that's only the existing X-ray based medical imaging market. NNOX hopes to enable everyone in the world to have access to one full body scan each year and increase early detection of medical conditions that are discoverable by X-ray. Their technology is based on silicon microelectromechanical systems, or MEMs, which are semiconductors with both mechanical and electronic components. This allows them to have a field emission array of 100 million molybdenum nanocones that generate electrons at low voltage. Their technology has its roots in the field emission display technology developed by Sony for TV screens and monitors. They also use new technology called cold cathode X-rays, which is very portable, operates at room temperature, and emits less radiation. All of this means their ARC products weigh about 154 pounds versus the 4,400 pounds that traditional CT scanners weigh. NNOX has filed a 510K for regulatory approval, but safety testing was delayed due to COVID. They believe their technology, quote, falls within a category of radiology vacuum tubes converting electrical input power into X-rays that utilize the same energy levels, radiation types, and throughputs as already existing and approved X-ray tubes applied in a wide range of radiology medical procedures, end quote. So they don't think there will be a novel claim or methodology related to their technology. For those who don't know, a 510K is a pre-market submission made to the FDA to demonstrate that the device to be marketed is as safe and effective and basically is substantially equivalent to a legally marketed device. Personally, I think this seems to contradict their claim of using new technology. Regardless, they think they'll get FDA approval mid-2021. The advantages of the ARC include reduced duration of radiation exposure, multispectral imaging capacity, higher stability, longer lifetime, and simplified hardware. NNOX expects each ARC to cost between $8,000 and $12,000 per unit to produce. For comparison, they say in their F1 filing that high-end CT scanners sell for between 1.35 and 2.1 million. To get a better comparison, I looked up estimated prices of different tiered scanners. NNOX intends to offer most of their units under a subscription model, which I'll get to in a bit, so this isn't an apples-to-apples comparison, but it's still good to look at. The resource I found categorized scanners by slice count. Advantages of a machine with a higher slice count include reduced scan times, lower radiation dosages, thinner slices for more detailed images, and capabilities for advanced scans to be performed, such as cardiac studies. Based on their article, New 128 slice scanners can cost between $675,000 and $1 million. New 64 slice scanners can cost between $500,000 and $700,000. And new 16 slice scanners can cost between $285,000 and $360,000. That means about a 96% cost reduction for the low-end scanners, up to a 99% cost reduction for higher-end scanners. Even if NNOX were to apply a 100% markup on the ARC and sell it, that would be 92% lower than the 16 slice scanners. They aim to roll out 15,000 ARC units by 2024. They're currently building 10 multi-source ARC prototypes in Israel, which should be available for partner testing in a few months. In addition to the ARC, NNOX will be providing a cloud service, aptly named NNOX Cloud, to provide a scan repository, radiologist matching, diagnostic review and annotation, assistive AI systems, billing, and reporting. Their main business model is to provide a subscription service with the ARC and Cloud integrated and referred to as a NNOX system. This will be targeted initially to underserved countries and regions since they don't expect the existing medical imaging market to be early adopters. As of the IPO, they had contracts for 4,500 plus units. I believe they've announced more agreements since then. Pre-sales represent over $164 million in annual fees over the next 3 years. A quick look at their financials. Most of their operations are conducted using the US dollar, so they denote their statements in US dollars. They're not generating any revenue yet. They lost about $2 million in 2018 and $22.5 million in 2019. Based on their statement up to June 2020 and their Q3 statement, they're on track to lose about $35 million in 2020. They had $39.5 million in cash and $3 million in liabilities before IPOing. They raised about $36.4 million in the financing round in the first half of 2020 before the IPO. Their aggregate compensation to executive officers and directors in 2019 was about $25.5 million, which includes share-based compensation. Since they're a foreign company, they don't need to disclose individual executive compensation. Now, this research wouldn't be complete if I didn't mention the fraud allegations and some red flags. I saw some red flags when I first looked into the company. Since the 2 short-selling fraud allegations have come out, I've seen a few others. The first thing I saw when going through their filing is that some directors may have conflicts of interest. Looking at the disclosed relationships, it looks like a lot of them are dealings between NNOX and some of Polyakin's other companies, though it's not clear to me if these agreements are favorable or not. Going back to their loss of $22.5 million in 2019 and the executive compensation, since they don't have to give details around compensation, it's hard to know how much of the compensation was salary and how much was share-based. However, they do have a statement in their filing that implies that Polyakin's annual salary was $480,000 before the IPO and would be bumped up to $720,000 once the IPO was complete. That seems very high to me for a company that's not generating any revenue, and seems like poor management. Citron Research and Muddy Waters Research also posted some fraud allegation reports. Some of the claims in their reports just seem grandiose and as if they're grasping for straws. I didn't go through all of their claims, but 2 did stand out to me. There are some oddities in the list of registered customers. The Gateway Group is NNOX's largest customer, but from what I found on their website, they're a wholesaler for consumer goods, fast-moving consumer goods, drinks, beauty and cosmetic products, health food supplements, consumer electronics, and stuff like that. The only information I could find for Golden Vine International was that they signed an agreement with NNOX, their representative was Lau Peiling, and they were created in 2018, and their registration was last updated in 2019. I couldn't find anything else about this company, and I searched in both English and Chinese. JS Royal Group is a VC fund. I don't know why they're signing an agreement with NNOX. Gold Rush is just way too generic. I couldn't find any company in South Africa tied to NNOX. LATAM Business Development Group is a business consulting and development firm with a focus on medical devices. I just don't understand why they have an office in Israel when they're focused on Latin America. The firm was also founded in 2018. The second thing was that Polyakin was pushed out of PowerMat for allegedly mishandling the company. He then joined a lawsuit the next year suing PowerMat. In addition, people haven't really seen a live demo of the ARC prototype. There are videos, but nothing I've seen that would count as substantial proof. An additional question I have is, why did Sony drop out? The F1 only mentioned Sony to say the technology was originally developed by Sony. If the technology is significant for the medical space, wouldn't Sony at the very least want to retain some equity in the company and/or get licensing fees from Nano-X? When I did my initial research, the Nano Arc looked like a truly disruptive product that could see Nano-X grow over 50 times, by rough calculations, so I bought a small stake in the company, despite my initial concerns around the financial management. However, after taking a deeper dive and seeing more red flags, I've since exited my position. Their product and stated vision is compelling, so I'll still be keeping an eye on them. They say they'll demo an ARC prototype at the RSNA conference in Chicago between November 29th and December 5th this year. The conference will be virtual, but hopefully the demo will resolve some issues. What do you guys think of Nano-X? Is there something I missed in my research or analysis? Comment down below and let me know. I'll be doing deep dives on more companies, so subscribe if you want to see those videos. Until next time.